Hello and welcome to everybody. Good afternoon and good morning to those that are joining from the earlier time zones, and good evening to those that are in a much later part of the world. Very happy to be here with you and thank you for joining us today. We are going to be together for 2 hours. We have 6 speakers today. After a first round of speakers, we will take a set of questions. So feel free to please leave your questions in the chat. We are a small group today of speakers as well as companies. So it'd be great to have a good interactive discussion that we've put together for you. And if you feel comfortable, please do share your video, and we'd like to see you. While you are not speaking, though, please do leave your microphones on mute. We are recording the session today, and it will be posted later on our website. And with that, I just also would one last thing, if you could, as on your name, put your organization as well, so that it becomes easier to see who's from where's, and then can kick off the discussion there. So with that in mind, our first speaker is Luciana Aguiar, the Head of Business Call to Action at UNDP. Luciana, over to you to kick us off.
Yes, so thank you so much. I'd like to express my appreciation for the partnership that we have with IMEDI. It's really interesting to have a partner that has joined us to strengthen the culture of impact management, particularly to deliver this type of content to enterprises. I'm really pleased also to have here in this panel Vox Capital, UNO Social Business, our colleagues from UNDP, GSIV and ISPST, and of course entrepreneurs that have joined us today. So I'll talk a little bit more about the work that we've been doing in terms of our consistent work that we are doing with enterprises in order to strengthen their capacities on impact management. And there's a clear reason for us for doing this, mainly because, not only because BCtA intends to support and actually to strengthen the ecosystems that can support social enterprises and inclusive business, and particularly in Turkey, that is a country where we are right here on the ground together with the Istanbul International Center for Private Sector in Development, but also because BCtA is a multi-stakeholder platform that is hosted by UNDP. It's one of the largest networks supporting core business solutions for development, and we are also providing public recognition for enterprises that contribute to the SDGs. So we've been doing this for more than 10 years. So we started doing impact management and measurement since 2015. And we've seen that this is very interesting in terms of as a solution to address the development priorities, and looking particularly in terms of the numbers that we have and the challenges that we face these days. It makes much more sense for us to address, or at least to search for solutions that can in fact be commercially viable and at the same time address development priorities. So I'm sharing my screen with you. I just want to share some some numbers. I think it's important to the entrepreneurs, particularly to look at these. And I think that the idea here is mainly to invite you to look at these numbers and to see how the private sector can in fact support the key challenges that we're facing these days. So we understand it's not only the role for the government to do this, but that business should really address these issues. So we are seeing that we have seen in the last years that we were gaining quite an impressive success in terms of lifting people out of poverty. And we've seen that the challenges were still very big, And particularly if we look and bring the gender lens to these challenges, so women are disproportionately being affected by poverty, and particularly looking at specific regions in the world where we have issues related not only to the deprivation of income, but actually a whole set of challenges that this population was facing. With the COVID crisis, I think this issue became even more important, right? So we have these huge numbers in terms of, and the challenge of seeing millions of people going back into poverty, an increasing number of new poor that we are seeing in many different countries, not only in the least developed countries, but also middle-income countries and developed countries. So, but we have this scenario to the future that almost 500 million people globally are expected to be pushed into poverty. And this is a huge challenge that we have to face, and particularly for all of us that are embracing this, the purpose of trying to solve, or at least to alleviate poverty through the work that we are doing, not only in terms of developing commercially viable business models, but at the same time addressing these issues. So this is one important point. The other point that I'd like to stress is that we have to look a little bit more in terms of the benefits to those that are to those forces behind of private sector engagement. So in particular, looking to the fact that only 100% of private sector projects explicitly target rural population, remote population, and those that are being left behind. The other point is that not all of them are targeting low-income population, only 5% of them. And in terms of the gender intersectionality, this is a very strong issue that we should look carefully. When you look at the SDGs, and we are talking about the 17 SDGs, and UN it has brought this big agenda as not only a development agenda, but for looking from a business perspective, it's a whole framework of new opportunities that can be addressed in a different way if you look in terms of opportunities for developing new business models or adapting your business model. But in a recent research that was done, the SDG 1 is poverty reduction, and SDG 10 that relates to inequality, to reduce inequalities, they still suffer from persistent neglect by business. And what is interesting to see is that there is a mismatch between the responses that are provided by business and the demand that are coming from investors. So if you look specifically at the SDG 10 that relates to inequality, there is a clear mismatch. Only 32% of the businesses are saying that they are addressing inequalities, right? While the investors are saying that 59% of the investors are saying that this is an important SDG to be addressed. The same applies to poverty reduction, as I mentioned before. The difference is even higher, 23% against 61%. So, and if you look at the other SDGs, some of them are quite clear, and the majority of them are directly addressed to the issues that relate to developing a business, such as SDG 8 that has to do with jobs, access to jobs, right? So this is one of the points that we see, some of the incongruences that we have identified. And I think that my major point here in this conversation is that not only we have to look at these dimensions when we are developing our business models. Of course, there are other issues that drive us to design business models, drive us to address our clients and our key stakeholders, but it's also to look at the bigger picture, look in terms of the development priorities, looking where is the country where you are living in, and how you can align your business strategy with these issues that are, these gaps that are there already. But looking at the BCtA network and looking at the companies that we have engaged in this network, we are looking for a systemic transformation of economies that can in fact serve the poor. And we've seen that this effort is being addressed by many interesting business models all over the world. They are quite successful in terms of balancing commercial returns with financial returns with impact. And one of the drivers is their intentionality in doing so, right? And being clear in terms of what they want to do, how they want to do, and how they're going to manage and monitor the results that will be achieved not only by their own business, but also in terms of the impact generated in the population that they are serving or that they are engaging with. So this is, I just would like to bring these numbers and this information to the entrepreneurs here today, just as a food for thought and actually to look at the opportunities that you may find in your market, but also in terms of the needs of the country where you are developing your business model, where you are operating. So in terms of our understanding and in what relates to business call to action, we continue to build a productive engagement with the private sector to offer opportunities for incremental transformation on the way that business access market opportunities and risks, improve partners' engagement in value chains, enhance their scale impact, how they can share prosperity with society, and align their business models with the global agenda. And this we've done through the impact management program that we have designed. It has much more to do with how we can create this culture for impact management. So sometimes it's much more in terms of raising the awareness and doing this constant exercise. So I think this is the message to you, and I will hand over to Rabail and to the other panelists. Thank you so much.
Thank you so much, Luciana. Without further ado, moving on to our next speaker, Funda Tuzer, who is the portfolio lead for impact investing at UNDP's International Center for Private Sector in Istanbul. Funda, over to you.
Thank you, Rabail. Just a second. I am trying to share my screen.
Please do, sorry, just if you have questions for any of our speakers, you may use the chat function to write them there, and I'll take them all in one go in the first round. Thank you.
Okay. So hi everyone, my name is Funda Tuzer and I'm working for UNDP's Private Sector Center, which is located in Istanbul. The main objective of the center is to mobilize private sector investments and activities towards the achievement of the 17 Sustainable Development Goals by 2030. And myself, I particularly work on promoting impact investing, particularly in developing countries and the least developed countries, with an aim to channel private capital for the SDGs. And today I will provide an overview of what impact investing is and what we do, what type of activities we do for advocating impact investing in countries, which also includes Turkey. So I'll start first with the definition of the impact investing. Impact investments are the investments which are made with the intention to generate positive social and environmental impact alongside a financial return. Specifically, the definition involves 3 observable attributes, and these attributes distinguish impact investing from the other types of investments. First is intent. So the impact investor should articulate an intent to achieve a social or environmental goal by identifying the outcomes that will be achieved through the investment, and also by specifying the beneficiaries who will benefit from the intended outcome of the investment. Second is contribution. So the impact investor should follow a credible narrative or thesis and describe how the actions of the investment or the impact investor will help achieve the intended goal. The third is measurement, which is most of the time the most difficult part for impact investing. So the investor should have a system of measurement in place to link the intent and the contribution to the improvements in social and environmental outcomes delivered through the investment. So when you look at the size of the impact investing market globally, we see that the global impact investing market size reached $715 billion at the end of 2019. And we see that it has been demonstrating an upward trend for the last couple of years. And IFC, International Finance Corporation, recently estimated that the market could actually go up as high as $26 trillion in the future. However, despite this fast-growing impact investing market, there are still large differences in the geographical allocation of the impact assets. So majority of the impact investing activities is concentrated in the developed markets. When we look at the developing markets or the least developed countries, we see very little activity despite the fact that these are the places where impact investments are the most needed. So of course, there are a couple of challenges preventing impact investing to proliferate in the developing countries or the least developed countries. So based on our analysis in this area, there are 4 major challenges which are observed across the developing countries, which limit the growth of impact investing in these countries. First, there is a lack of awareness and capacity around how to structure impact investments, particularly among the conventional investors. Second, appropriate financial instruments and high quality investment options and opportunities with track record are quite few or are lacking. Third, there is the legal and regulatory frameworks around impact investments and also the effective policy incentives to mobilize private sector resources are missing. And finally, the investors and impact enterprises have a low level of sophistication and limited ability for impact measurement and management. So to promote impact investing in developing countries and to address these challenges, as the private sector center of UNDP, we have been developing and implementing technical assistance projects and activities in Turkey and in other countries. First, I would like to talk about the impact investing ecosystem study we conducted in Turkey back in 2019. So we developed this methodology to analyze the existing market conditions for impact investing in developing countries, and we piloted this methodology in Turkey first back in 2019. The study aimed at identifying opportunities and challenges and mainly showcasing the high potential areas for attracting impact investors to the countries. It also provides policy recommendations for the governments to help them develop certain incentives or certain legal frameworks to promote impact investing in the countries. With this study, we also identified major stakeholders in Turkey who would be relevant and who would be also interested in promoting impact investing in Turkey. For that, we have used the 5 pillars of global steering group. The 5 pillars means like the supply of impact capital, demand of impact capital, who need the impact capital, so intermediation agencies, who are the government agencies who would be relevant for impact investing, market builders and professional services. So we conducted a comprehensive desk research and in-depth interviews with major stakeholders in Turkey to analyze the ecosystem in the country. So based on the desk research and more than 20 in-depth interviews with major stakeholders from the public and the private sector, we have identified 5 high potential areas for impact investing in Turkey. So these are the areas where Turkey still faces major or significant development challenges, but also have the potential to generate profitable and commercially viable business and investment opportunities. The first of them is, of course, the refugee livelihoods. So the Turkey is one of the largest refugee hosting countries. So this is currently the biggest development challenge that Turkey faces. Second one is women empowerment. Turkey still unfortunately lags behind developing countries in terms of gender equality. So this is a major development challenge that the country should tackle with. And there are also several business opportunities which can be developed within the framework of gender. The third one is renewable energy. Turkey has high potential for wind and solar power generation, and the government is also introducing incentives to promote investments in that sector. The fourth one is health tech, and the final one is financial inclusion. So Turkey is actually a promising entry point to catalyze impact investing activities, to tap both into the Middle East and North Africa region and Eastern European countries. However, there is almost no experience of impact investing in the market currently. There are a couple of adjacent activities that can be labeled as impact investing, but still there is a need for development on that frontier. There is also a lack of knowledge, unfortunately, around impact investing by the financial managers. And of course, there is no regulatory framework in Turkey which defines the impact investing. And therefore, because of the lack of regulatory framework, there is no incentive for promoting impact investing transactions. There is also a lack of data and data collection processes for impact investing activities. So local capacity for impact measurement and reporting also needs to improve in Turkey to develop the impact investing activities in Turkey. So one of the outcomes of this study was actually the decision to establish the National Advisory Board for Impact Investing. The National Advisory Board for Impact Investing will actually become a part of the global GSG network, the Global Steering Group for Impact Investing. This is a body which covers 33 countries across its 28 national and regional advisory boards to catalyze impact investments in the markets. And these national advisory boards actually are comprised of investors and enterprises and government agencies and several stakeholders which are relevant for the impact investing. So Turkish National Advisory Board will become a part of this network, and this will of course provide the opportunity for knowledge sharing or even business development opportunities for the impact investors and the enterprises. For Turkey to establish and to nurture a functioning impact investing ecosystem within the country, we have actually defined a roadmap, and in that roadmap we are recommending that there should be a regulatory framework, and the impact investing should be clearly defined in the regulation. And after after defining the impact investing in the regulation, of course, tax incentives could be provided for both the enterprises and for also the investors to promote impact investing in the country. Data availability should also be advanced, which is very critical in terms of the impact measurement and management. And also the incubators and accelerators. There are several incubators and accelerators in Turkey actively operating in different sectors. The structure of these incubators and accelerators and their operations could actually be aligned with the principles of impact investing and the SDGs to attract more investors, more impact-oriented investors to the country. Well, another initiative that we have been implementing in Turkey and in other countries is the Sdg Investor Map. With the Sdg Investor Map, we identify specifically the business models and investment opportunity areas which correspond to the policy priorities of the government and development challenges of the country, of Turkey. So these investment opportunity areas are actually commercially viable and bankable business models which generate a positive social and environmental impact, which could be actually an attractive investment opportunities for the impact investors as well. So for the Sdg Investor Map in Turkey, we have conducted a rigorous desk review process, and we had interviews, stakeholder consultations with more than 36 stakeholders. And at the end of this process, we have identified 27 investment opportunity areas across 9 sectors. So after identifying the investment opportunity areas, we organized an investor convening where we brought together the investors and the enterprises which operate in the investment opportunity areas that we have identified. We organized this event back in February. Unfortunately, we were not able to organize it physically, but it was virtual. And for that event, we prioritized 3 sectors which hold a high investment momentum for Turkey, and these were infrastructure, renewable energy, and healthcare. In that event, we provided the opportunity for the companies and also for the investors to get to know each other. So each participant had 2 minutes to introduce themselves. So companies introduced their business models and their activities, and they had the opportunity to present themselves to the potential investors, and the investors had the chance to talk about their investment strategies and the investment criteria that they consider when they are investing in Turkey. So this was actually a quite successful event in terms of facilitating the dialogue between investors and the companies. Well, another event we organized at the end of the Sdg Investor Map was a high-level policy dialogue. So this was a launch event. And at that launch event, President Erdogan participated and delivered the opening speech. And he personally reiterated his support and the government agency's support for promoting impact investing in Turkey. So I would like to play this very short video for you to raise hopes for the future of impact investing in Turkey.
Biz de gerek Cumhurbaşkanlığı gerekse diğer kurumlarımız aracılığıyla etki yatırımı çalışmalarına gereken desteği vereceğiz. Bu önemli projeye öncülük eden Birleşmiş Milletler Kalkınma Programı özel sektör merkezine etki yatırımı platformu Etki Yap Türkiye Kalkınma ve Yatırım Bankası ile Cumhurbaşkanlığı Yatırım Ofisi'ne teşekkür ediyorum.
So this is basically the end of my presentation. So to sum up, in Turkey, impact investing is quite a new term. There are several adjacent activities, but there is a huge interest from both the government side and also from the private sector side to expand this market in Turkey. But of course, to do that, we need to have a strong project pipeline, which means we need to have commercially viable and impactful business models to attract impact investors to Turkey. Thank you.
Thank you so much, Funda. I think we're going to shift gears a little bit with Sol now, our next speaker, who's going to talk about it from impact investing point of view. What are impact investors looking for? Over to you,
Hi,
Sol.
everyone. Yeah, great. Hi, everyone. My name is Sol. I work for Social Business, which is an impact investor. When Rabel, asked me a question on what our impact investors look for, I thought, wow, what a great question, because we do ask a lot of questions to enterprises all the time. And I think I really want to perhaps organize this session by looking into 3 different segments. So what is the one question that we're asking as an impact investor and also enterprise should be asking us? And number 2 will be looking at some of the questions that we actually ask enterprises only. And the third part will be the questions that we ask ourselves as impact investors. So I think when we start our very initial stage of the sourcing, there's one big umbrella question that we typically ask. And that is also something that enterprises should be asking, which is the investment thesis fit. So when we say investment thesis fit, it will be various aspects. So that will include impact thesis, sector focus, geographic areas, investment stage, the companies at what is the investment instruments that they're looking for, or what are the impact investors providing, and also things like average investment ticket size. So at YSB, Social Business, we are a sector agnostic impact investor. So we will be investing in all different types of sectors, including healthcare, education, agriculture, and energy or environment. We also typically invest in early stage or growth stage startups with the mission or with the intention to provide social environmental impact. And we mainly invest in 5 different countries. So across India, Uganda, Kenya, Brazil, and Colombia. And of course, our average investment ticket size will be looking at $100,000 USD to $500,000 USD. So all these criteria will be quite fixed. What that means is a social enterprise coming to us, let's say they are currently based in Madagascar, which is not necessarily our current geographic focus. It's very unlikely that we will move forward, given the fact that it's quite a set fix of investment thesis that we have. So the fit will be the number 1 question you should always be considering as the umbrella question. Then moving to, let's say, what are some of the questions that we ask enterprises? So I would like to say there are mainly 4. So just go through all the list. So the first one will be the business model. Second one will be on the impact side. And third part will be on entrepreneurs, yourself, as I see here. And the fourth part will be financials. So I think business model is quite straightforward. What is the business about? What do they do? How do they do it? That will be something we'll be looking at. And moving to the impact side, I think there are mainly 3 questions. So number 1, the first question will be, what is the impact the enterprise aims to generate? Is that access to clean water? Is that better access to vocational training? What is it? That is something that we ask. And of course, given the fact that it's an impact investor, we also love to have the track record of the impact measurement. I think something that we always realize is that impact measurement is quite a tricky angle. I think I've been in this social impact industry for a while, and I think it is a very difficult tool that we always learn and we're still developing in the process. But over time, what I've also seen is not just about what I have done so far, but it's also the depth of the impact. What I mean by that is that, say, in the past, we only cared about, oh, you know what, I trained 5,000 farmers. That is impact. That is true. And let's say you then move further into, okay, so by providing agricultural training, these farmers have increased their income by 10%. That is also good measurement. Then the follow-up question on the depth side will be, so after the increase in income, what happens to them? Maybe their children had better access to education as a result of the income, etc. So these are the impacts that we would like to hear. And of course, if you have better track record, that will be something plus. But I think don't be too concerned if you don't necessarily have all the tools figured out, because in all honesty, it is something that we can work together alongside as an impact investor to help you to better measure and monitor the impact side. Then the second question underneath the impact will be, what's the scalability? Let's say, so one of the portfolio companies that we invested that is based in Brazil, so they use the franchise model to provide trainings to car mechanics. So because they are using the franchise model, it is way easier for them to scale up. So they can just expand within Brazil easily by adding the franchise car mechanic centers so that they can provide trainings to, let's say, so in Brazil, the bottom of the pyramid will typically belong to social economic class, CDE. So those are the target clients. And by using this franchise model, it's way easier to scale up. I think another example that I can give also is international expansion. So one of the companies that we work with is an education company in Brazil. So what they do is they try to help children to improve their literacy. So by training the teacher, the students will be able to write an essay, a story, over a course of a year. And after a year, then the company itself will be converting those books into ebooks. And after that, the children have an option to either purchase the ebooks and to make into an actual physical book or not. And that's where the revenue source comes from for this business. And they're looking into expanding into East Africa. And I think that's also quite a good example to show how easy it is to, or how scalable the impact itself is. And I think the third part underneath the impact, and this is very absolutely critical, will be, is the impact intrinsic or is it core to the business model? What I mean by that is perhaps giving an example, another example of perhaps a cotton enterprise in northern Uganda. So when we typically have our investment committee meeting, we always invite entrepreneur and have an interview with him. And throughout the 45 minutes of the interview, the entrepreneur never, ever even mentioned the single word of impact. Did we end up investing in the company? Yes, we did. The reason is because despite the fact the entrepreneur has never mentioned the word impact, the impact itself was very core to the business model. So it's a company, they procure and purchase the cotton farmers in northern Uganda. And there's no other way for these cotton farmers to sell it because there used to be no market access there. So by this gentleman to set up a company in northern Uganda, automatically the cotton farmers had access to the market, regardless of the intention perhaps this gentleman had. Or maybe, let's say, not necessarily intention per se, but it's not necessarily conscious intention. Because at the end of the day, he never changed his gross margin. I believe his gross margin stayed at 9%, regardless of how lower the market price was or how high the market price was, because he wanted to make sure the price itself was fair to farmers. So I think if I recap the information underneath impact, you need to think about what is the impact, what is the scalability of the impact, is the impact core to the business model? Those will be the three questions you need to ask in the impact side. Then moving to the entrepreneurs, I think it's quite a straightforward. What are their capabilities look like? That would be quite an important question. What have they done in the past? Is their past experience relevant to their business? Of course, there are so many transferable skills that you always have. But let's say I only worked in agribusinesses for 10 years, and now all of a sudden I want to start a company that is a fintech company that wants to give out loans to SMEs. We will be raising some of the questions on, do they understand the industry know-how? Do they have the ecosystem? Can they build a partnership enough for them to be successful in the field? And I think the third question we always ask is, so what is the motivation? I think something that we always keep it in mind is that as much as we are investing in a business model, we are actually investing in founders, entrepreneurs. So at the end of the day, we want to hear their stories. We want to understand their passion behind it. And that really helps us to understand, is this company going to last after 3 years, after 5 years? And I think that's going to be the questions that we ask to entrepreneurs and moving to financials. So that is the fourth bucket. And to be fair, I think that is a really Pandora's box. And we ask a lot of questions on the financial side. I see quite a lot of smiles there. I think you already have gone through this quite a lot. So some of the questions we'll be asking is, what's their current financial look like? Has the company already broken even yet? If they haven't, what is their path to profitability? Of course, we tend to prefer companies who have EBITDA positive. That doesn't mean we never invest in the negative, because I think what is critical is for us to look at the historical financial performance and also look into further into their future performance. So I think probably the one advice that I can give is if you can have more rigorous financial statements ready in back of your pocket, it really shows your investment readiness to investors. And I think moving to the next slide will be, so primarily we only do debt as a YSP. So some of the things that we'll be looking into will be, what is their current level of debt? Is the company highly leveraged? I will say there's no perfect number that we look for. There's no ratio. We say, this is the number we're looking for. This is the minimum threshold. We don't have it. The reason is because every single business model has different ratios that we have to consider. So for instance, if we're investing in a company that gives out loans to startups, it will always be highly leveraged because of the nature of the business. So we will be asking those questions, but that doesn't mean we have this minimal threshold that we'll be asking from. And I think it really depends on the risk tolerance of impact investors. So given the fact that YSB invests in early stage and growth stage, our risk tolerance is quite high. It might not be the case for other impact investors. So I think it's really case by case. And I think the fourth question that we'll be also looking into, given the fact that it is going to be enterprises that have social or environmental missions, maybe they in the past they have received quite a lot of grants. So the question we'll be asking is, will the operation be sustainable without grants? So when we're doing some of the financial analysis on our end, we'll be removing the grants component in the revenue stream to understand how will their revenue look like, how will their EBITDA look like if they didn't receive any grants, for us to understand their financial sustainability. So I think those are the four questions we had, four questions that we ask our entrepreneurs and enterprises. And there's one question we actually ask ourselves, that is going to be additionality. Is that if YSP doesn't invest in this company, will there be other investors? What is our value addition that we provide to this enterprise? And that's absolutely critical. I think, both Luciana and Funda mentioned it. Technical assistance is something that I think is a really ongoing trend. It's getting a very popular mechanism. So we often want to understand, do we have value addition in terms of two things? Number one would be financially. Number two is non-financially. Are we adding value to the social enterprises? So if I really just summarize all the information that I just literally threw out to you guys, the first question we ask is the investment thesis fit. Number two will be the business model. Number three, impact. Number four, entrepreneurs. Number five will be financials. And number six is on to us. It's going to be on the additionality. And I'd like to, happy to answer any questions you might have in the Q&A session with you guys.
Thank you so much for that energizing talk. So I do see a couple of questions here. Mustafa, would you like to just turn on your mic and ask the question you had here?
Sure. One of the questions was actually, I guess, answered by Irem. So it was the latest report that you generated. So I guess it is accessible from the link that you shared also.
Mm-hmm.
Irem also added this Funda's report, the report that Funda mentioned. So my question is, we are experiencing these amazing times with the COVID happening, and there's a potential for impact investment to scale to the big trillions of dollars, but is it happening in a faster rate or it's happening at a slower rate? So how did COVID actually change the perspective of the impact investors?
I think Sol, I'll let you answer that, and then move on to Funda and Luciana.
Absolutely. I think, to be honest, I think we have been, probably I'll say the workload for us has been increased as a result of COVID. I think what we have also started looking into is to expand our horizon to understand what are the other support that we can provide on top of the on top of the financial support. So if I look at our investment pipeline, I will honestly say it's really full. It's probably busier than pre-COVID. Of course, we will be going through slightly more rigorous financial analysis to understand what was their impact of COVID on this certain company, how they have mitigated certain risks. But in all honesty, I think we just approved one deal in Colombia that is focused on tourism. And if we're honest, COVID really has hit the tourism industry quite a lot, but we're willing to bet on this industry because we really believe in the entrepreneurs, we believe in the social impact this company will generate. So to answer your question short, I think that the volume of the investment deals that we're seeing in the pipeline has increased significantly, and also say that the different types of the investment instruments that we're using also has increased significantly on top of the financial support.
Thank you. I have a question for you here, Funda. I'd like to ask, so what, in your research in Turkey, what are sort of the priorities you've seen that impact investors have here, and how are you connecting them to impact investment opportunity areas that you mentioned in the investor maps?
Sure. Well, in Turkey, actually, I have, as I have described in my presentation, there are 5 areas that are quite interesting from the impact investors, actually. So the refugees refugee issue is one of the most popular topic that the impact investors are actually interested. Renewable energy is definitely one of the area that is highly attractive for both conventional and impact investors. And we have seen a couple of examples in terms of adjacent activities for impact investing, such as for women empowerment as a third area. For instance, Garanti Bankası is providing gender loans to the companies. And with this gender loan, they are aiming to increase the number of women working within a specific company. And also they are also measuring if women are also getting up to higher positions, management positions within that company. So depending on the number of the women working for this specific company, they are actually lowering the interest rate and facilitating the loan process for the companies. So these are mainly the areas that will be more attractive and interesting for the impact investors. Another issue that the impact investors are seeking in Turkey and also across in other countries, because we have been implementing these studies in other countries such as Ukraine, Morocco, and Djibouti, and we see the same problem or same issue, that despite the fact that there are enterprises which generate socially positive social and environmental impact, most of the time financial aspect of the companies or the enterprises are not that strong to mobilize investors to do the transaction. So it's really important for the social enterprises or the impactful enterprises to kind of strengthen their financial muscles to ensure the investments from the impact investors.
Thank you, Funda. Luciana, I have one question for you as well. Because we at Business Call to Action, we work with so many business models, and most of them growth stage, mature companies that have gone through the process that the entrepreneurs today here in the room are going through. So as these entrepreneurs seek to create impact, what would be your advice for them? What practical tips they could take away?
In terms of generating impact, what we've seen, and there are many interesting business cases in Business Call to Action, and what we've seen so far in terms of best practices coming from them relates to the fact that they were quite well positioned to respond to the COVID crisis because they are developing inclusive business models, and they are looking with this lens for development too. So it's part of a business model that has been well structured as a business, but at the same time is addressing these development priorities. So looking at the COVID crisis with all these everything that we've done and the huge impact on business, having actually a negative impact on business. We've seen that inclusive business were able to respond quite quickly to pivot innovative solutions, and at the same time to identify key partners to deliver their services together with governments, together with the civil society. And this was quite interesting to see. And we've also have seen good responses coming from business that went through the impact management, the Impact Champions program. So they did the homework in terms of organizing their internal data sets, understanding their stakeholders, understanding their client and those that they are benefiting at the end. And what we've seen is that this has helped them not only to have more well-structured business models, but at the same time, they were able to adjust their service offer at the end, their products, and also to better communicate with these partners, particularly when they start engaging on B2G models, right? Models that they are implementing together with the governments. So this is one example of BV in Colombia. BV is a women-led social enterprise. During the COVID crisis, they partner with the local government, with the local cooperatives and business associations to deliver health services to women. And this model was mainly refined after they went through the impact management training and process, and internalizing these best practices inside of their business model. So this is a good example coming from Colombia. There are many others, some from Turkey also. We work with Pinar on this. So I think that it's interesting to see that impact management is not only a tool where you are going to tag the SDGs or you're going to, you know, at least have a big, beautiful picture of your business so that you can market and communicate, but mainly it's an instrument for enhancing your business model and also for reporting to investors, of course.
Thank you, Luciana. And I have one more question before we move on to another speaker. So this is one for you. What is the most important part of an impact report when you're evaluating a startup? What should they focus on the report?
Yeah, I think I briefly probably touched upon this topic. I think it will be very much on the, let's say, breadth and depth of impact. I think over time, initially, I think when I started my career in social impact, it really just was what I had done. But I think over time, it has really evolved. So something we need to keep in mind is not just output perspective, but it's also in terms of what has that output resulted in. So what is the actual impact out of that? So that will be number one in terms of the depth. Number two, also will be looking into what is the direct and indirect beneficiaries. That will be number two. And number three will also be more on the timeline. So I think sometimes we oftentimes say, hey, we have created this impact, let's say over 2 years, this number of people. Some of the times impact investors would like to also assess what will be the potential impact we can generate with the X number amount of money. So having that kind of information, having the timeline also helps, because let's say income of the farmers have increased by 10% in a year. It could also be different from 2 years. So having slightly different units and uniform units will also help.
Yeah. Yeah, what we say is that, you know, because most companies still, and this is not just for startups, most companies still only report at the output level, number of people trained, number of users, number of website hits, the so what of it. So what is happening because of that? What is happening in a year's time, in 2 years' time? And how well is that being thought of? So thank you so much. We're going to move forward with our next speaker, Daniel. He is the impact co-lead at Vox Capital. Daniel's going to talk to us more about this very topic on impact measurement and management. Why does that matter? Does it matter? And how do we go about doing this? Daniel, over to you. You're on mute.
Hi, sorry. Thank you so much. I'm showing some slides just regarding my presentation. First, I'd like to thank you for the invitation to share our experience in this webinar. And it's good to be the fourth presenter because I can build upon what the previous presenters have already showed us. And there's a lot of things that are connected in my presentation. So first, I'd like to present you. I'm gonna split my presentation in three main topics: a brief introduction of who is Fox Capital and why IMM, impact management and measurement, matters to us, for us, and how is our IMM approach. Okay, very briefly, just an overview, of course, of these three topics. We are an impact investing firm. We are a pioneer. I'm based in São Paulo, Brazil, and we invest just in Brazil. We are 100% impact investing. We are a pioneer in the field in Brazil. We are 12 years old by now. And we are investing mainly in VC venture capital funds. And we have one credit fund, but our main experience is based on VC funds for impact, for startups that are focused in impact. And we look for Series A rounds to invest. So we are mainly focused in not very early stage startups, but those that have already a tested model, those that have already some experience with the market, so they can come into a Series A rounds to be invested by us. And we have two VC funds. I will talk a little bit about our experience with these funds. And we are now in a moment of restructuring this IMM area. As my bill was presented, I am co-leader of this area, saying that there are two leaders in this area, two senior leaders in this area, because we understand that we must tackle this agenda in a very serious way. So this is the only area in Vox Capital that are two co-leaders sharing the responsibilities. Okay? And we have experience with three main SDGs, which are number 3, focused on health, number 4, focused on education, and number 9, focused on industry and innovation. But specifically in this number 9, we are targeting the target 9.3, that's about financial inclusion. Okay, here's the first yellow flag for you that we must be very serious about how to address the SDGs in a way that they are very broad. And maybe it can be linked with any kind of activities, but it cannot be a rhetoric for startups or for our field. So we're always looking for not just for the goal, but we're digging in and trying to understand in which specific targets the startups we're working with are addressing, are trying to contribute. So we are not just in the overall perspective, but really trying to understand the specific contribution to specific targets that we are working with. Moving forward, why IMM matters to us? I'd like to share this presentation or the answer to this question. This is a very challenging question in 3 perspectives. The first perspective is about the sector. It was already presented here a concept about what is an impact investing. So I don't want to go over on this again, but I would like to highlight 2 words that are at the inner of the definition of impact investing, which are intention, and we heard intention and intentionality here, and measurable. Okay, and we understand that at this moment of the industry, it's a very early stage. We are in emerging industry. We have to be very fair at the concept that defines us. There's a lot of ESG investments coming out. There's kind of a buzz of ESG opportunities of investments. And we believe that we have to set the boundaries of what is impact investments. And to set these boundaries that defines the DNA at this very moment. What we do now will define the upcoming years of this industry. And we need this industry to grow. Otherwise, if this industry doesn't grow, we, as an asset manager, we won't grow. So we must have this sectoral perspective, this sectoral look, doing and staking at the concept and measuring what we are doing. Because we believe that if we measure, we build the field. We build the field at the very heart of its concept. So we must measure and advocate, disclose what we are measuring, disclose the outcomes, the outputs that they're coming out from our IMN, and advocate for others to do the same. So it's a way to build the field. So this is the first perspective on why we do IMN. The second perspective is an organizational level, okay, of course, at the Vox level. And here we can have three approaches. The first one is the governance. We have to report to our investors. The investors came to us like 10 years ago when we started our first fund, investing on us and expecting us to deliver financial returns, of course, and social and environmental impact. Blended. It's not this or that, it's both. So we have to report then on both. Financial, that's easier because there's a tradition on that, and on impact, that's quite a new field. And also because we have to report to society. So this is the governance of why we must, at the organizational level, to be doing IMN. At the management level, because we truly believe, and we have experience on that IMN help us to improve the investees' operations and their strategies. It helps us to better understand the relevance of the service and the products. It's better understand to improve the quality of what they're delivering to their beneficiaries, to the customers, to their clients. It helps us to better design their strategies, and if they are delivering better services, better products in a more efficient way, we are adding values to the companies. And also we add values to the companies. They have a higher market valuation. And once they have a higher valuation, we can have a better financial returns. So here there's a clear integration between impact and financial returns. Offering alternatives, ideas, inputs on impact, help them to be better, and helping them to be better increases their market value, and so we can have better financial returns. It's really blended. It's really an integration. And of course, as a learning opportunity, we use it to learn and to improve our organizational capacity, to take better decisions, to take better decisions on our new funds, on our portfolios management, etc., and on our team building, etc. So it's also a very important learning opportunity. And the third and last, but not least important level, I would like to say it's not going, sorry. It's the moral level. I think we have a moral responsibility to measure. We must walk the talk. We are saying that we are doing impact investing. We are saying that impact investing must be measurable. So if we have this strategic position, if it's part of our DNA, we must do it. It's not an option. We are very seriously committed to our stakeholders to do impact investment, so we must measure it. So we have these three perspectives: the sectoral perspective, organizational perspective, and this moral, more general perspective on impact investing, on impact measurement and management. But of course, we do have many challenges. I would like to highlight two main challenges here for you. The first one is that we still need to move forward with this full integration between impact and financial. It's not that very easy. There is a very interesting project going on from Impact Frontiers. We are partnering with Impact Frontiers. There is a spin-off from Impact Management Project, and they have some international cohorts that are studying this integration, and we are part of this cohort along all this year long to better understand how to make this integration. And this integration still is much concerned about the expected impact, not the achieved impact. So we can integrate the expected impact with the expected financial return much easier. It's not that very much easier, but it's easier than to integrate the achieved financial returns and the achieved impact returns that we can have. And of course, we can have a better use of data to improve our learning process, to bring more inputs to our investees, etc. But we are working hard. We're building this area in a very strong way during this whole year. So I hope that next year I can present you, how far we have gone with tackling these two challenges. How we do it? Just the final part of my presentation. So how is our approach to IMM? Well, we are following the guidelines from Geneva, but mainly from Impact Management Project. And there's a spin-off from Impact Management Project that is Impact Frontiers. And we also have a good connection with the B analytics, the B assessment. There's a very general cycle of how we approach IMM here. There's just the first level here. There is prior to the investments. So we have the VC team looking for good opportunities in the markets. They are looking at many different startups. And when they come up with an interesting market opportunity that has some maybe good impact perspectives or opportunities, they bring it to us, to the impacted team. And then we have what we call the impact due diligence or the impact opinion. And this is basically an interview that we have with the founders of that company, of that startups. And what we're seeking here very seriously is there an impact intentionality? Is there a will to change the world, a will to change, to bring some solution to people and the planet? And as it was said before, we don't expect someone at this stage to come up or to show up with that kind of pitch narratives that's very organized, that they're presenting us all the SDGs they're going to tackle, all the fear of change, all the logic of their impact narrative. No, we are not expecting that. They can, as Solar mentioned, they can not even mention the word impact, but we want to understand if they really want to bring some solution to a challenge for people and planet in the world. It may be something of the biography of the founders, maybe something of the problem they are trying to solve, whatever. But this is the key here, intentionality. And this is the key of maybe the overall cycle that we have. Because we have learned that if we don't have this at this very stage of the cycle, it's very hard to work with it after we made an investment. We had previous experiences where we have believed in the solutions, where it was a very good market solution, and it wasn't very clear what was the impact, but we decided to bet. Okay, let's invest in this organization. And we didn't have a good experience, and we had to take out this company from our portfolio. Because if they're not delivering impact and financial returns, they cannot stay in our portfolio. And of course, is the solution linked to our thesis? Is it co-linked with the SDGs that I have presented you? I must say that we have these three SDGs, but we are raising funds for a third VC fund, and it's gonna be a more open thesis. We intend to bring others SDG to this thesis, but at this moment, we just have these three perspectives. After that, once we realize, okay, there is intentionality here, there's something we can do together with these founders, then we move to help them, we'll support them to design their fear of change. So we just don't expect them to bring the fear of change because we help them to design it. You know, we use our facilitation skills, our experience with fear of change, and we help them to draw it, to design it, and to come up with a simple. I heard something, just a comment here. I was in a webinar with Adam Bendel. He's the CEO of Tonic, and he came up with this quote that he said, well, IMM for us must be light and enough. And I think, well, that's great. That's gold, you know, because as Solar told us, it might be a burden to the startups. It might be very heavy, and we cannot make it very heavy at the beginning of the industry. We make to find out solutions that help the entrepreneurs to design their strategies. So we help them to design the fear of change. And then we make the investment. And after that, we start with these three basic strategies. That the first one is collecting outputs. I know there's this whole consensus about outputs, but outputs is also important for us. And we are collecting, gathering outputs in a quarterly basis, different outputs from different startups that are facing different problems and tackling different solutions. But annually, we work then with the BIA, there's the B impact assessment, that we try to understand more kind of an ESG approach and try to understand different dimensions of the organization. And we have a long track records on this B impact assessment to understand how they are behaving in the relationship with us and with the impact and with the customers, etc. And we have also some specific approach that are fit to different maturity levels of different startups that we have. What does it mean? And this is my final comment. We have developed this tool that we call impact meters, and it's like this. It crosses the level of maturity of the business model from the very early stages in our perspective. It must be a Series A, but in early stage in a Series A, going up to scale up, crossing to growth, and then reaching scale up. That is the more rigorous and strong model that we can have, crossing with evaluation accuracy that we can have to each of our startups. So what I'm saying here is that we don't expect that we can use the same evaluation approach or the same IMM approach to all the startups, because they are in different levels of development, and we must respect that. So for those ones that are in the initial level, we have the lightest approach, much more based on NPS, on outputs, on just some qualitative perspective. And for those that are on the up and right side of the chart, that are at the scale up stage of development, we try to bring to them some much more rigorous approach, and we partner with universities. We invite evaluators to bring this experimental or quasi-experimental approach to really understand if their solutions are bringing the outcomes. Here we are talking about the outcomes that peoples and planets really needs to solve our problems and to move forward to tackle all the SDGs to 2030s. That's it, just an overall presentation. Thank you very much.
Thank you, Daniel. That was very, very practical and hands-on, and I think must be very relatable to all the entrepreneurs here. I'll get back to you with more questions later on. I'll move on to Eva here, who is she's the private sector specialist at Undp Geneva. Please, the floor is yours.
Thank you very much, Labai. Hello everyone. It's a real pleasure to be here with you today. I'm Eva, and as Labai mentioned, I work at the Undp Geneva office as private sector specialist, and in particular for the team working for the SDG Finance Geneva Summit. So the SDG Finance Geneva Summit is an annual event that was launched in 2016 based on the success of the New York Social Good Summit, but with a different objective. So with the objective of the mobilization of private capital to accelerate the implementation of the SDGs. So every year we bring together different actors from the sustainable finance and impact investment ecosystem in Switzerland and in Europe, and we create a safe space for high-level networking among stakeholders from the development, finance sector, large corporate, and academia community. So to demonstrate that reaching the SDGs can create both impact and financial return, we launched a new initiative back in 2019, so very recently, called the Growth Stage Impact Ventures, GSIV, in partnership with the renewed Swiss Tech University, EPFL, the telecommunication company Orange, and ASAP. And the objective of this selection was really to showcase at the summit the unique innovations for the SDG ready at a growth stage in developing countries. So maybe let me share my screen so you can get a better idea of our work. Please do let me know in case you're not able to see it.
We can see it.
Great, thank you very much, Rabail. And so what makes the GSAV selection unique is that vendors cannot apply directly, but they should be nominated by third parties. So what this means that we go to third parties as impact funds. I have some examples here, like Bamboo Capital, Acumen, or as investors that are here in the webinar with us today. Or we also contact foundations working on philanthropy or UN agencies and initiatives like the BCtA working with impact vendors, and we ask them to nominate vendors from their pipeline. And we did so because we realized that indeed there are many different programs around the world that are already sourcing these innovations and are working to support them in developing countries. And through the nomination process, we are able to leverage these existing pipelines and due diligence. So then the vendors go through a very rigorous evaluation process, and every year we select the top 12 that will be pitching at the summit. And they will be pitching in front of our audience, which is mostly composed by impact investors and other actors of the impact investing ecosystem in Switzerland and beyond. 50% of the audience is composed actually by investors. So what I wanted to give to say today is to give you also an overview of how the program works, because it is a problem your startup could be part of maybe also in the future. So we have our nominated vendor, they should respond to some eligibility criteria. They should be from developing countries. They should have inclusive business model with products and services that involve people at the bottom of the pyramid. They should already have a solid team with complementary competencies. I think this was also mentioned by Sol. They should have the potential to be scalable at a regional, continental, or even cross-sectoral level. And their social and environmental impact should be integrated already in their missions and their KPIs. They should have impact metrics already in place. And also they should be aware of the potential benefits or negative impacts of their activities. We do also have a financial criteria because, as mentioned, this is a growth stage selection. So we ask the vendors that go through selection, they should have raised already at least USD 500,000 or have reached break-even point through organic growth. So they should be already at a later stage of their growth. And they should be, of course, looking for partners to grow, looking for support. Every year, so we select some different teams related to the SDGs on the selection focuses on. And until now, we have worked with companies offering financial services, access to quality healthcare, affordable and clean energy, waste management, and circular economy solutions, as well as climate data. And we are always looking for ventures that, of course, reduce inequality, but also that promote women economic empowerment, either in their governance structure or through the provision of products and services that aim to expand women's economic space. So after vendors are nominated by third parties, they go through a very competitive process that sees first evaluations of Undp and EPFL, and then a second screening from a technical committee, which is composed of both investors and corporate, as well as UN and other experts from international organizations. And lastly, they are endorsed by an advisory panel of UN directors with specific thematic expertise on the SDGs that we choose every year. And then what do we offer to them? So of course, we do pay their trip to come at our summit. And what we provide is facilitated access to investments with a sort of matchmaking support. As I mentioned earlier, half of the participants are from the financial sector. And back in 2019, what we did is organizing 15 bilateral meetings, one-to-one, between the entrepreneurs and the investors and all other potential partners to grow. And half of the entrepreneurs who then participated to the evaluations that we did 1 year after the summit have managed indeed to raise at least one equity round throughout the year with the highest win of 5 million. So we have proven to be successful in facilitating investments. Secondly, we also facilitate cross-sectoral partnership. This could be, for example, with big corporates or also with other UN agencies that can provide access maybe to government contracts. We do also provide some training and technical assistance. This is also very important, both for the preparation of their summit or the pitch at the summit, and through also some partners. For example, in the last year, we have been working with Google, which has been offering a 6-month mentoring program through Google Mentors for technology, product design, and support for growth. And lastly, of course, we provide as much as possible to them visibility and endorsement through webinars, events, and communication material. So we have just announced the new 12 finalists for 2021. But today I'm going to talk to you about our alumni actually from 2019, which I believe are a wonderful example of how an impact entrepreneur like you can grow a scale, produce systemic impact, but also significant financial return. So the first of all, I would like to start with an example of a circular economy business, which has been successful in scaling across geographies. Sistema Bio is a market-based approach to create climate-smart agricultural infrastructure, and it manufactures, sells, and installs patent biogas technology for smallholder farms. And its waste-to-resource platform converts organic waste into clean, renewable energy and organic fertilizers. And by converting it into natural gas, it creates food cooking, eating, running productive agricultural activities, and producing decentralized energy. And it also provides technology, training, and a financing model that leverages digital and mobile technology to reach farmers, adapt to local communities, and ensure long-term adoptions. So currently, Sistema Bio operates in 5 countries, is headquartered in Mexico, but it expanded to Kenya, India, Nicaragua, and Colombia, and it currently has pilots in 20 more. The core products are manufactured in its facility in Mexico. And it managed to reach 150,000 users. And you can see here some of the outputs and impacts that the company created. For example, the reduction in CO2 emissions, as well as the hours saved on wood collection per household, 29 hours per month. And consequently, the tree saved over 3 million, and therefore the reduction of deforestation. So in 2019, Sistema Bio raised a Series A round of 15 million in equity and some debt from multiple renewable investors, including Engine Impact Fund, Alpha Mundi, Kiwa, the Low Carbon Entities Fund, and more. And in the same year, it entered India through the acquisition of a startup, which has then become its subsidiary in the region. It demonstrated a constant growth in its revenues in the last year, except for 2020, because it has been hardly hit COVID, Mexico in particular. So Sistema Bio already reacted very promptly. It froze the recruitment, stopped some field operations because some shipment ran into the light, but at the same time managed then to rebound at the end of the year by cutting unnecessary spending without laying off staff, revamping its field activity, and leaning more into digital activities. They became more efficient, and they managed to close 2020 with the same revenue level as the year before. And this year, they also actually opened a new factory in India, which allows the company to produce its equipment at a lower cost, and also reduce, of course, the cost of the delivery from Mexico. In terms of best practice, and I can see many connections here also with the presentation before, Sistema Bio is a B Corp and is also therefore GEARS certified from the Global Impact Investing Ratings, which really facilitated, I think, the work of many investors that aim to expand their portfolio in the impact investment domain. It leverages international recognized greenhouse gas measurements and impact methodology to calculate its emission reductions, and has worked with many third-party reviewers for its impact, including the World Bank and the Energy Sector Management Solutions Program, which evaluated the effects of its programs in Africa. And another practice, which I believe should be never neglected from Sistema Bio, is transparency. So Sistema Bio circulates its weekly KPIs to the team, but also to partner to ensure that data transparency within and outside the organization is respected. So even when we talk maybe just about outputs, I believe it's important to share them with your investors, with your partners, to show how your companies is going, especially in these difficult times of COVID. And the second case that I wanted to raise very successful is frontier markets from India. So frontier markets aims to broaden rural community access to clean energy, digital and financial services through the delivery of high impact solutions at the last mile. The company trains and empowers women through e-commerce and distribution to sell and services solar power solutions and other small appliances as smartphones, as well as large appliances and more to rural communities. So it's building a supply chain integrating women community members through local skill building development. So frontier markets has been very successful in building a proven and scalable model, I think, with now a network of 3,800 women entrepreneurs that are trained in marketing, sales, data connection, and technical repair to sell to rural households using smartphone and internet connectivity. It currently has 15 branches in India and reached over 2 million beneficiaries that have been impacted by its services. And in terms of impact, you can see here some of the impact measurements they use. They do a division within 3 main impact spaces. I will say the first of all is the gender impact on women, of course, with over 45,000 rupees extra input earned by each woman entrepreneur on average annually. And the second impact sphere is the one related to rural empowerment, with the annual net earnings and saving per households also calculated by frontier markets. And lastly, of course, there is the environmental impact with the tons of carbon saved through the sale of solar solutions. So as I mentioned, frontier markets has been very successful. It has been a bit positive in the past 4 years. And in 2018, it raised its Series A equity round of 1.4 million to invest in these processes, technology, and expansion in 3 Indian states. And it raised also another small round right after the summit from the NG Impact Fund. And is now raising 1 million in bridge financing for the next year. But what I think is most striking about frontier market is that it nearly tripled its revenues only between 2019 and 2020, because it managed to transform the threat of COVID-19 into a new opportunity. During the lockdown, it reacted immediately by collecting in the shortest time possible enough data on the current needs of the rural community. And also thanks to the local Undp office, it partnered with the local government to help providing essential products to rural customers during the lockdown and beyond, particularly solar lighting, but it also expanded its product basket to food items, masks, clothes, and more. And I think this really connects to what Luciana said before, that social entrepreneurs like you are really well positioned to respond in this moment of crisis, because they know the needs of those particular communities that they serve. And in only 1 year, frontier markets secure government permits to reach 500K more beneficiaries compared to the year before. And this is because it has developed a deep cultural and political understanding of the needs, challenges, and aspiration and purchase patterns of rural households in connection to electrification, lighting, cooking, and productive needs, which are usually not reached by traditional retail networks. And with this unique information is now constructing a database of rural households through database insights on impact, thanks to its network of rural entrepreneurs. And I believe this is a really good practice that demonstrates that the unique information that you can create with your impact can become an extremely valuable asset to a social enterprise. And I don't want to steal more time also to the next speaker, which is another very successful venture, I believe, which I'm actually familiar with. But I just wanted to say that if you would like to learn more about this, or I would like to invite you to participate to the online pitching session that we will have in June with the new finalists. And there you will learn more and other successful cases of companies that have been able to scale in developing countries. Unfortunately, the summit is postponed to November, but we hope to see you online in June. And I will share you now the link in the chat so you can register, and please feel free to ask any question you might have later on.
Thank you so much, Eva. Please do put it in the chat. I think it'd be very interesting. And last but not the least, we have Arun from Sahas Zero Waste. It's a bit late in India, but Arun is joining us as a company, as a success story of an entrepreneur that went through this process of doing impact measurement and management and going to market and accessing capital. And Arun has gone through the same process that the entrepreneurs here are going through today with the pains of your theory of change, the pains of your KPIs. So, you know, we went back and forth several times on this. So I think he has a lot of interesting anecdotes to share. Over to you, Arun.
Thank you, Rabel. Thanks, everyone. Hello to everyone. I'd like to just share my screen and get started. I hope everyone can see my screen.
Yeah, we can see it.
So, yes, thanks, Rabel. I'm Arun, and I represent Sahas Zero Waste today. We're a social enterprise based out of Bangalore. And this is one of the photos taken with our entire team at one of the outing events, obviously before the COVID period. So something very quickly about our organization. We are a social enterprise, and we provide waste management services in most parts of South India and also the other parts of the country as well. So we have pan-India presence. So in terms of, let me get straight into what we do and how we actually present this to not only just our investors, but over to the entire community, our clients and the society as well. So this is how we represent our business model, in terms of what we do, in terms of how we actually generate the revenues, how we try and look at breaking even, which is obviously a very important thing for a social enterprise like ourselves. So we get into the nitty-gritties and provide this kind of reporting to all our stakeholders. And for those, I think there was another question around impact report. We would love to learn more about impact reporting as well. But do visit our website, sahaszerowaste.com. I'll put it up on the chat box later, but you can try and download the impact report that we've put together last year. We are working on the current one as well. That'll give you a very good idea. So just to say something about our organization, we're a very unique organization who works majority on service fee from waste generators. And through this, we're able to provide very massive social impact, where we have almost 300 people on the ground, base of the pyramid, majority of them being women, employees, single earners from their family. And we have been successful in demonstrating a decentralized model in waste management, which is very well sustained now, and we're in the growth phase and moving into the scale-up phase now. So this is in terms of the impact that we've created and the way we actually define our impact. So in terms of the amount of waste that is diverted from landfill, in terms of how we actually divert it. So we actually get into the depths of traceability in terms of how we, recover the best resources, best mechanism of resource recovery from different types of waste streams. We focus a lot around low value waste, and I'm talking about your torturous plastic waste, single-use plastic and non-recyclable plastic packaging, etc. And through this process, we also demonstrate how we actually help in recovering GHG emissions. And the best part about our service is 98% of the waste we manage is recovered as resources. So like I said, in terms of the social impact on the right side, you see how we demonstrate 252 people of the 300 employees are from the base of the pyramid. In terms of gender equality, in terms of how we actually support the informal sector in formalizing them, because you may not realize this, but 90+% of Indian, the waste management industry in India is managed by the informal sector. So we want to be pioneers in terms of formalization as well, which is a key part of our, our impact that we want to achieve going forward as well. In terms of compliances, minimum wages and social benefits, especially no child labor as well. So we've been very successful in demonstrating this in India and partnered with marquee brands and corporate clients in order to achieve their compliances as well. Just diving a little bit more deeper into how we actually demonstrate, in terms of the impact we create. Here are some numbers that we put out there. For instance, 99% of job holders at our organization have, an active bank account. 91% of them feel that their incomes are stable, which may not sound a big deal, but then it actually is quite a big deal to them because they're able to plan their expenditures and their investments and things like that. Also, it may not sound very big, but 90% of our job holders have access to formal electricity connection. So these are certain aspects that we do. We do this once in a couple of years. In fact, you will be happy to hear that this is in collaboration with one of our impact investors who are very keen in terms of identifying these kind of impacts that we create on a regular basis as well. So I would like to share with you in terms of how we actually communicate the impact that we've created. So there are three different aspects that I would like to talk about today. One is the impact value chain. So like Rafael mentioned, so we were a part of the Impact Champions program by BCtA more than 2.5 years back. We took a lot of time in understanding the impact value chain at our organization. So this was a great exercise for us because we were able to pull together different colleagues from different departments, different business divisions, and we were able to come together. There were multiple iterations and we were able to really understand the impact value chain. And I'm happy to share this, but the case study that was published, you can see the case study down here. The case study that was published with BCtA, the outcomes mirror each and every business decision that we want to take going forward. When I'm saying the outcomes, I'm talking about the way forward. So we were able to understand genuinely what is our core strengths, where is the need, and how do we actually meet these requirements. So we were able to come up with 3 pillars in terms of the way we go forward and how are we going to demonstrate impact, and not just impact, how do we scale that impact as well. So the impact value chain was massive for us, but to our surprise, you wouldn't believe this, but a lot of corporates, as a part of the application process, they do ask us for the IVC as part of an application process. So I'm really happy to share that, this exercise for us was definitely instrumental in us not only understanding, but also in us communicating. Recently, we've started working a lot with the Indian government, where we've been looking at waste management in rural. So this particular aspect of waste management in India is still very naive and very premature. We're able to explain to the government and make them understand the different elements that are required to build infrastructure and entrepreneurial development within the waste management space. It was very difficult for us to convince them in terms of return on investment, in terms of development of infrastructure. It was not easy. But then when we resorted to different methodologies like demonstrating the SROI around the social return on investment around the projects, this definitely brought in a huge mindset shift in amongst the government, and we're happy to share that we're working with the government on scale up of decentralized solutions in India very, very, very well in a very holistic manner as well. So the SROI calculations as well was very helpful to us, and again the impact value chain was a fundamental sort of building block in that sense as well to build the SROI. And finally, last but not least, but we've looked at a lot of very innovative ways of demonstrating impact. So on here, you could see certain videos. There are a couple of videos that we've put together, not couple, but multiple videos that we put together on our YouTube channel. Please do visit our YouTube channel, and you can have a look at how we demonstrate the formalization process, and also in terms of how we have impacted through our own employee network. Obviously, then the BCtA case study as well was a brilliant tool for us to be using internally, for us to demonstrate to our employees and colleagues about our vision for impact, and that brought about a lot of sense of satisfaction with their jobs, in order to, by being able to see through the vision that the company has, and wanting to be a part of an impact enterprise. We also put together the circular impact report and multiple case studies as well, again, all available on our website. Some of these for our clients specifically, but some of them for general public. So the first one that you can see here in terms of a case study of a particular city, how we actually contributed towards a cleaner city, and how we envision to actually having very good decentralized waste management solutions there as well. On the right side, this is one of our most famous case studies of a waste worker called Hassan Khan, and it depicted our business model around how we formalized a waste worker into an entrepreneur in waste management. So he is now something like a franchisee. I wouldn't call him a franchisee as such, but then in those lines. But he's 100% formal, and he's got a very transformed life. So like a Hassan, there are other multiple entrepreneurs that we have been able to formalize, and we're really stepping towards scale up and growth in terms of formalization of our entrepreneurs as well. I was really happy to hear some of the other panelists in terms of how they would love to see as from an investor perspective in terms of impact that is created. So for us, I would like to share some of our experiences. Sometimes we fail to understand if they are impact investors or just VCs. So the due diligence process will not involve anything to do around around impact management or impact measurement for that matter. So that's a big question that we have. And to be very honest, it was an eye opener for me today. And I'll definitely take back some of the learnings from today to management, and share all the information as well. Also, what we've seen recently is corporate are moving into this space. We do see opportunities through funding and opportunities through investments through very large global organizations who are looking towards, yes, they do seek ROI as well, which is not the best thing, but then we are also looking at them aligning it to their business goals and their sustainability commitments 2030 as well. So that's something that we're working on recently, and the SROI also has come in very handy there. But this is a message from our founder, Wilma Rodrigues, who wanted me to share this information. She is very keen that entrepreneurs should not dilute purpose and should stand strong, while certain investors do not really. That's not the only goal. Sometimes there is a lot of other aspects that come into investors speaking to entrepreneurs. So as social entrepreneurs, we should really stand strong and not really look, not wear blinkers at the end of the day just for the sake of investments. So Wilma Rodrigues, our founder, has been instrumental. She's been one of the first movers in this space to secure investments as well. And we are happy to have fantastic impact investors on board who add value and who also allow us to follow the path that we believe is right. That's another important thing. And then finally, we're talking about SDG impact standards as well coming up. We're really looking forward to this uniform framework, if I can call it. And then in terms of regular impact reporting and evaluations as well, I think this is going to be key going forward. We do see it as a challenge, and we're unable to communicate it to most investors we come across. But then we're lucky to have a select few investors who really see value in this as well. I think I've run out of time. I would love to talk more, but then, I would hand it over back to Ravel to take more questions. But thanks for the opportunity, and I hope you benefited from this.
Thank you so much, Arun. I do want to kick us off with, I have lots of things to ask you all. With Daniel first, if I may, because you mentioned a theory of change and impact diligence at the pre-investment stage for as a bare minimum, if I can call it, for impact measurement. However, the reality at the pre-investment or startup stage is also always evolving. So how do you know your theory of change as you are trying to build it? It's also evolving. So how do entrepreneurs overcome that?
Hi, thanks for the question. Yes, we assume that fear of change is something that is always evolving. So we must review it in a while, and maybe every 2 or 3 years. That's why in our Series A round, we are looking for startups that are in a Series A round because they have already some experience with the market, even experience with their service or product, and they are in a stage that they can draw or design a fear of change that is more sustainable. They're not going to change it since they cross the next corner, because they just realize something different with the experience. It helps us to stabilize for a while the fear of change. And it's part of our learning process that when we are bringing inputs to the system, for gathering data and bringing it back to them through our B analytics or other sources of evaluations, we can also help them to review their fear of change. But last comment, we are working with light and inner fear of change. So we don't have those very deep and very detailed fear of change. You can access some of examples in our website. So it's quite easy, you have just an overview, an overall structure, and we just have to make some small adjustments on that. But it's quite open enough to set direction, but you can be improving it during the journey, the VC journey. It's a quite long journey, it's a 10 years journey.
Thank you. Eva, I also have a question for you. You've come across so many business models and you've shared some good examples there of companies that are doing both impact and scaling up. So what are some of the common challenges you found in these case studies? What are they struggling with?
Mm-hmm. Yeah, thank you, Rabal. I think that one of the biggest challenges come when scaling back and try to access new markets, especially if they enter another country or another region, or they expand maybe from a B2C to maybe also a B2B business model. And we have seen this because many of the companies that went through our program, they were not only seeking for investments, which of course was necessary, but even more, they were looking for partners for growth. And they found big corporates in particular to be particularly interesting in this domain. And I think that was mentioned also by Arun, that there is interest from big corporates to support those social entrepreneurs. And we had, for example, one case of a large corporate to provide technical support. We had this company called Ignitia providing tropical weather forecasting to farmers in Africa. And it successfully concluded a partnership with Orange, the multinational telecommunication corporation, to scale and access new markets in West Africa. And similarly, the case I made before of frontier markets, which was looking, to the help and support of an agency like Undp to access public procurement opportunities in other regions. That was also very important for the company. So I think this is a challenge, but it can be, overcome if the company really works on expanding its network of strong partners for growth between both the impact investment, the corporate community, and leverage also its contacts with the Undp and beyond.
Great, thank you. Aaron, there was a question for you in the chat. I think you have answered it. There's also one more question. What are the expectations for software developer employment and coding training within the scope of impact targets? What are the SDGs that need to be addressed in terms of training in software development? What should be done for these goals? How should work be carried out in the companies? Perhaps, Daniel, you want to take this one for companies that are working in coding and training. So I think the question is that if the impact thesis is not super clear in terms of a direct impact on the SDGs, how should they go about with impact measurement? Do they necessarily have to align with the SDGs?
Well, there are different kinds of theses, no? I have to be clear about that. We at Vox Capital, we work at 3 different kinds of theses. There's this more sectoral thesis that's much more about the market and opportunities and problems that we may help to contribute to solutions. This is really out of the landscape. There's a second, that is the impact thesis. And in the impact thesis, we put our position. So what is the problem that we want to address and how we want to address that? And then the last level is the fear of change. So there's these 3 kinds of thesis. For us, there must have a connection with the SDGs. So it's broad enough, and our theses are connected with the SDGs. And we expect that when developing a fair change, the startup also can tell us which are the SDGs and which are the targets, specific targets in the SDGs. So for us, it's a must-have. It's a must-have. And we believe that if there's a real intention to change people and planet, you can fit it in the SDGs.
Yeah. It's a very broad and universal framework. So if you look at it more deeply in terms of targets and indicators, there is scope. Arun, I wanted to just also touch base with you on the impact value chain or the theory of change. We'll come back to that. You mentioned last week when we were speaking on the call that it has really helped you in terms of thinking through your strategy. And then as you've used your theory of change that we developed together when it comes to not just accessing investors, but also talking through your business model, strategy, and your brand. So can you tell us, like, with all of this effort that you put in through the case study, has it paid off, and in what ways? If you could give us more details on that.
Yeah, absolutely. So, I would say it has paid off in the long run. It's been a long journey, to be honest, because we didn't start off, with the right thought process, but then it took some time. I'd love to give you an example. There was another company recently in the waste management space who was, on a webinar, trying to explain getting investments was so difficult at the beginning, probably 3-4 years back. And then one of the investors he stumbled upon actually explained to him how much of value that the company was creating through this space. And that's when they pivoted and started talking about, how they create impact. So impact came along the way, but then for our organization, impact, it started with impact. So, a couple of decades back, it started off with this idea around waste management, but then recently, I would say around 8 years back, we started understanding how to create impact, and that became the core values of the company. And through this process of, the theory of change, we were able to bring that out and crystallize our thoughts and put it on a piece of document, and then come up with the vision that we wanted to create going forward, and the engine for that change, I would say, what's the mechanism of that change. So very clearly, we've come up with 3 distinct vision statements. I wouldn't call a vision statement, but then 3 clear vision around our business. And to be very honest, because there's been constant communication around this, not only to our clients, but also to potential clients and also to the society through our social media, channels, etc. We've been able to, come up with a very credible positioning within the market space. And that has now brought us more and more opportunities of creating business models in waste management. So to be very honest, it took a long time, but we're seeing a lot of traction now. And now we're at that stage of growth where we're also linking up with the government. That credibility in the industry has helped us. Things like traceability in waste management was never spoken about. But then when we started talking about it in a very different way, thanks to the IVC, the impact value chain helped us to really understand the nitty-gritties of how to even communicate those information. So I would say that, yes, it's taken time, but then now we're in a position where we've built that brand image in the industry, and we're able to scale, and hopefully this next year is going to be a good year for us in terms of scale as well.
Great, thank you. We have come to the end of our webinar today.